Today's market call is presented by FactSet, financial data and analytics powered by tomorrow. Best part of waking up, folks, is in fact Folgers in your cup. Our new sponsor here. No, I'm kidding. That's a joke. That's a joke. The reason I brought it up is because Dan was talking about Folgers coffee, and it made me think of the old slogan. But it's market call. It's January 28th. It's a frigid Wednesday. Today's Wednesday, right? The 28th Correct. Here in the tri-state area, 11 a.m. on the East Coast. That's Dan, Nathan. I'm Swizz. And we're breaking stuff down. I mean, I don't want to bury the lead here, Dan, but how many times over the years have we said you're going to wake up one day and gold's going to be up $100? You can walk in the next day, it's going to be up $100. And here we look at my friend, the gold. Maybe Amanda, by the way, Amanda is doing great for those that are concerned, worried, interested, all of the above. Look at the gold chart, bitches. I mean, this is crazy.
Well, it's funny when you started saying it's going to open up 100 and then open up 100. I mean, it is doubled in trust. So 100 points back
ain't
then,
what it used to be. Ain't what it used to be today. Yeah.
I mean, listen, we it's funny, before market call yesterday, obviously Danny Moses was on with us, and
of Moses Ventures
and of the On the Tape podcast,
Friday Night Dirty, and his Substack,
and of the Friday Night Dirty. And just before that, we were on FaceTime with Vinny and Porter, his two partners in crime and all that content they create. And Vinny Porter, as you know, I don't need to tell anybody, these are two of the most astute investors that I've ever come across. And they're so, there's something about them. They're not like these fucking big mouths or this and that, whatever. They're very deliberate. They're very thoughtful, that sort of thing. We were talking about silver, and Porter's like, yeah, everybody and their mother has come out, whether you're a technician, whether you're a metals guy, whether you're a macro person, whether you're this, that, whatever, like everybody thinks it's done. And I was like, I think it's done. And Danny and I were looking at SLV. It was trading at 98. I said, I'll bet you that it goes to 88 before 108. He goes, I take that bet.
He goes, how much?
And I said, $100. And, who knows? I do think, Guy, today in silver in particular, the volatility or lack thereof is interesting. And maybe we could pull that chart up. Because, again, at some point, and you said this a day or two ago, maybe you said it yesterday, at some point, you will have this meltdown. You know what I mean? It'll be everybody goes for the door at the same time or whatever. And you said this going back to when it went to 70 from 80, whatever the hell it was. You said doesn't mean it's not over.
I think that's right. And if you look, just to sort of continue down that path, PAAS, which is Pan American Silver Corp, not to be confused with Palo Alto Networks, is actually lower on the day. So that's just something to watch. I only mention that because sometimes the equity market knows something that maybe the commodity market doesn't know yet. So it's going to be, again, it's worth watching, but the volatility bands are going to continue. And the higher silver gets, the more volatility we're in for. And I keep going back to that day in December where it made a new all-time high on the day, closed on the lows of the day. And within a week or so later, it was just back off to the races. So there is something going on. There's fundamentally things going on here that we've talked about. Obviously, animal spirits are at play, but just back of the envelope math suggests, in my opinion, silver's got a lot more runway. And the gold market, and I don't want to get too bogged down in this, but the gold market is telling the gold market continues to sort of flash red in terms of what it is saying. And it's the de-dollarization trade. It's all these things wrapped up in one. It's central banks repatriating their gold, continuing to buy gold. Like, what do they see? What are they preparing themselves for? And obviously the equity market making an all-time high today. We printed 7,000 in the S&P, first time ever. Clearly is not heeding that warning, or maybe it's not a warning at all. But what I'll tell you is just the way I look at the world and through my history, it's absolutely a warning.
Yeah, I mean, it's funny. You could be really right the way you have on gold and silver, and you can just not get whatever you think the knock-on effects are that. And I'm not saying you. I'm just saying.
No, I've said that. You're right. You're 100% right.
It's crazy. Like, and listen, you just talked about the volatility bands. We've actually had this discussion, for 15 years since the financial crisis. You know, there are times where currencies and commodities and a whole host of other risk assets, macro risk assets, have this tremendous volatility. You see swings in currency. We're seeing it right now. I mean, think about it. We're not seeing it in yields right now. It seems like the yield on the 10-year has ground to a volatility halt like the S&P 500. So for some reason, you know, you could say, well, at some point you're going to see those other macro risk assets kind of settle down a little bit, or you're going to see the volatility bands in the S&P and yields start to pick up a little bit. And again, maybe that starts today. Maybe because we're going to preview Microsoft and Meta and Tesla, and then we're going to get into Apple and Amazon and Google, and then in a couple weeks, NVIDIA, and that's all attached to one trade. And then we have the Fed, and then we have the president to see what he does, and Chair and Lisa Cook, and then we see who he names. Like, these are all things. You saw that Besant today said they're not going to intervene as far as the yen is concerned, that sort of thing. So there's a lot of things out there that could cause volatility in the equity markets. We didn't hit this yesterday, Guy. And I feel bad that I didn't see it until right after market call. But consumer confidence.
Yeah, it was a horrible number. I think it was the worst in 14 years or something.
Yeah. And so, and one of the things in the survey that consumers are talking about, they're talking about inflation. And at the same time, Trump is in Iowa saying inflation's done. It's gone. Affordability, it's not a word that people use anymore. And it's not too different than what's going on, let's say, in what happened over the weekend with ICE. There's only so much they can tell people, the things that hit them emotionally or hit them in their wallets, right? That they're not feeling what they see. Do you understand what I'm saying? Or whatever they're seeing is not correct, and they should, that only lasts for so long. And I think that's one of the things that worked into the survey of that consumer confidence, all the things that, the price of gas, the price of eggs, job security, this and that, whatever. But then the other one was the political environment. I just think that's an interesting little segue. It's not something that you would assume would work into consumer confidence.
No, but it clearly, yes, and I saw that yesterday as well, and it clearly has no impact whatsoever on the market. So, again, consumer confidence is what it is, and every administration seems to make the same mistake of trying to tell people that things are great when I think people absolutely know that they're not nearly as great, at least for them, that people say they are. And you can't tell people how to feel. I think that's your point, and it's well taken. And through the lens of the market, though, nobody seems to care. I'll say this before we sort of get into other things. The market's basically ish. Look at the VIX today, having a bit of a day, and it's for some reason it's doing this sort of minor grind higher. If you want to just do an intraday chart, Amanda, you'll see what I'm talking about. They're, at least for today, something's happening in the volatility index. So that's worth watching. Now, maybe it's on the heels of what's going on in precious metals. That might be part of it. It probably is. But, the VIX starting to sort of peek its head up, I think is absolutely worth taking note of.
Yeah, and maybe it has something to do with this as a segue, Guy. We're obviously getting in the meat of mega cap tech earnings, but we've seen some earnings, and so there's some reactions that I think are worth noting. One of the things, I woke up really early, and as I do, I pick up my phone, I see what's going on in the markets, and
how many times a day do you think you pick up your phone?
Probably on average about 75 or something like that. Why? What do you think? So I read something today that the average American picks up their phone, and I honestly, I found it astounding. I just couldn't believe it's possible. 186 times a day. So you can go on your Apple iPhone to the Screen Time app. You can scroll down to where it says pickups, and you can see how many you did today, yesterday, the day before, or you can look at weekly averages. Mine is about 75.
Seems reasonable.
But I sit in front of a FactSet machine all day long with a clock on it. Do you know what I'm saying? And I don't have any social media accounts, so I don't have any apps like that. I think a lot of people check, that dopamine, the dopamine you get, Guy, when you post something and you get all those responses. It's not
I know a lot of dopamines.
Not the Doppler effect.
Which you learned about yesterday on the show. You thought I'd make this stuff up. By the way, for you folks, I want you to all focus on market call, but as you're listening, watching, do us a favor and effort that number and drop your number into the chat, and maybe we'll do a giveaway for the high number, I don't know. Just a
Well, I
thought.
don't know if we
Anyway,
have. No, but people would you just game it. Someone's going to put
well, I
like
mean,
500 on there or
you don't want
something.
to lie to us.
So one of the things, going back to the VIX for a second, maybe it has to do with some of these earnings reactions. So let's look at ASML. Okay, this is one of the largest companies. I think it's a top 5 in Europe. And they're a semi-equipment maker. And so you look at this move, right? And we were remarking about this yesterday. AMAT, some of these other names had been on an absolute tear when you think about some of the things that some of these memory guys have had to say, or even Intel. Intel sold off. A lot of folks who were defending it after its results. What was it, down 20%, and opened down the next day after that? A lot of the defenses were, well, there's so much demand, right? They didn't have the supply, that sort of thing, whatever. But my point is that, maybe the equipment names running into it, so you had ASML gap up, if you want to pull that back up.
All-time high.
Yeah. So it's given all of it back.
Lower on the day.
Yeah.
So here and I'm glad you brought this up, because this is not an insignificant company. I think it's a $600 billion company, or maybe a little bit less, but my point, you understand my point. Yeah. And, all-time high today. Let's see where it closes. A lot of real estate left, but you can see we are in relation to the 200-day moving average. Again, all these names, all of them have been trading like, biotech stock in early development that gets phase 3 approval type of thing. And that's not what's really happening here. So I look at ASML. Obviously, we gapped higher earlier this year. There's a gap in the chart, probably comes in around 1050 or so. Here we are at 1500-ish, a little short of that. Yeah, I think there's a reasonable chance, if we have one of these engulfing patterns today, that, we do this back and fill. And it's not necessarily, we all talk about this all the time. It's not the numbers necessarily. It's the reaction to the numbers that matters. And at least for now, the reaction has not been that robust.
Yeah. And again, we were talking about like on Fast Money last night. I mean, when you have these sorts of runs in earnings, and, another one, pull up GLW, they reported, we were talking about, they got
your hometown. You're all excited about that.
Listen, I am excited about that. So you had that contract from Facebook, $6 billion to lay fiber optic to their data centers over the next 4 or 5 years, $6 billion. Okay. And, it's a rounding error on an annual basis. And you have that gap, and then you have earnings. And let's look at the 2-day or 3-day chart here for a second. I mean, that's a beautiful breakout. No doubt about it. Huge volume after a big consolidation. So, you look and see what's going on here. I always find gaps like that, guy, to new all-time highs interesting. And then look at where it gapped to 102-ish. And then it got as high as 113-ish. Like, that's, people are tripping over each other. Either you're short.
Do you believe that history repeats itself? And don't give me the Mark Twain, it rhymes, because
you're the literary guy. Okay. I'm the guy who grew up in Syracuse.
No, it's okay. So fair enough. I mean, just so straightforward. Yes or no, history repeats itself.
It rhymes often. That was pretty funny. No,
that was actually a good delivery by you.
Yeah, okay.
I mentioned that because Amanda, who is efforting the charts today, if she were to go back all the way to 2000, look at the run up in Glassworks back then, and then look at the subsequent move. Look at what we're experiencing now. It's the same exact thing. It's the same. Now, granted, from maybe a little bit of a higher level, but my point is you're seeing the same type of enthusiasm that you saw 25 frickin' years ago. It is identical. And if we fail at that level, and again, a lot of time left, I get it, but that is something that I think people will say, man, history is in fact has repeated itself.
All right. Man. So let's leave this chart up here for a second, because I think it's really important. All right. So I made the point yesterday that, to me, the irony is that they literally got a contract by one of the hottest companies in the space that is driving the positive sentiment about the technology regime that we're in. Okay. That was Meta, to lay fiber optic cable. That's exactly what they were doing to support the internet build out, right, in the late 90s into 2000. So to me, what's interesting is, yes, this is a very different company. Okay. Like a very, very different company. It is worth noting that the stock lost 99% of its value. Okay. Yeah. Now, again, different company, different earnings, and all that sort, right? It's a good company. Okay. What's going on right here, this is on investors. The company's just doing what they're doing, and they're not being very promotional. If anything, in this whole ecosystem, the most promotional companies are those in the private markets. That would be OpenAI. That's a
Mhm.
handful of others. Okay. So the public companies, I think in many ways, I think Satya Nadella, I think Sundar Pichai at Google, I think a lot of these CEOs have actually been very measured about what's going on. But they also have the ability to do this build out with their cash flow for the most part, and they have great balance sheets. Okay. So here nor there, and they're great credits, for them to raise capital. This is interesting because to your point, is the sentiment, is the enthusiasm about this, is that what's so similar? Do you know what I mean? Like that's really, and you cannot tell me, and let's just rip through some charts because then we're going to get to Seagate for a second, reported great quarter. Look at what's going on here. The stock is up, Guy. What am I looking at? It's up 20%.
It's incredible.
20%. I mean,
I saw Jim Cramer writing about this yesterday. Listen, yes, I'm glad you brought it up. Yes, I have not seen this coming, but you bring this point up a lot, and it's correct. No, you could have bought this stock hand over fist, and nothing was really that different. I guess it's just the realization that people woke up and said, "Wait a second, what are we going to need in this sort of new paradigm?" And it becomes these storage names, and it's just remarkable what's happening. But I don't see, this is me, I don't see the sustainability. But I've been saying that for 3 weeks now, Dan, and look at what the stock is.
I know, but Guy, listen, we've been around. If you're listening to us or watching this right now, and you've only been in the markets for 10 years or something like that, I mean, you've seen, you've seen some stuff. Okay, let's just be frank. And the most, the most dramatic thing was obviously COVID, but you didn't learn any lessons from COVID. You know what I mean? There was no lesson to be learned from the market period during COVID. We didn't even have a down year in the biggest black swan event. We've used that expression, or market participants, or observers or pundits or whatever have used that black swan term. Right? There was a guy who wrote a book called Black Swan. All this. Or was that Rabini or
who I haven't, you haven't heard from him all that much, which is pretty interesting.
Yeah, and my point is like we never actually really had a black swan event. If you're looking at the stock market right now and you're skeptical because of what you think is a building bubble in asset values and misallocation of potential resource, if that actually comes to play, and there's a good chance it does, and the market sells off dramatically, that's not a black swan. I mean, that's the thing that everyone. So I guess to my point, you said I've been saying this for 3 weeks. We are in the midst of one of the biggest stock market bubbles, and that doesn't have to be a negative thing. That stock could double again from here, and you could be totally right in what your criticism is, but what's going on in the market, nobody can control. I mean, like, right? So, like, my point is like, listen, we're here. We're not Monday morning quarterbacks. We're just kind of calling it the way we see it. We do have a sense of history, but we also have a sense of PTSD from some of this stuff too,
100%.
right? So my listen, you could be buying. You could. I hope that you bought this thing 3 months ago and now you're selling it and buying a house. You know what I mean? Like I don't know. There's fortunes being made. There's fortunes being lost on the other side of it too. And you and I have been around for that, and it's very, very painful.
No, it is. And Doug Cass is pointing out in an email that he sent to us that there are a lot of things that he's watching today. Yields being one of them. The broadening that everybody seems to be talking about that I haven't. If you're talking about broadening in the form of energy and maybe some healthcare names and industrials, okay, but the broadening is not nearly to the extent that I think people want it to be or say that it is. And it's also pointing to the weakness in the financials and sort of the underlying breadth of the market. That's all true, and at some point, all things that will come home to roost. He also put out a piece this morning talking about the Schiller, this CAPE index, cyclically adjusted price to earnings is at levels, probably we've seen only one time historically, which again, he points out correctly, as we have said as well, is not a timing tool. But what it means is all these things mean there's no valuation support whatsoever. There's no safety net in the market. And, if and when that day comes where people wake up or something happens, if you're hoping that there's some sort of cushion to slow down the fall, it's just not there. Not in the form of valuation, at least.
Yeah. Agreed. And again, we'll go back to it. I mean, like, hopefully our commentary is helping. None of it are recommendations. I get involved in some of these stories and I get caught up in trying to be contrarian, and that can be painful. But I just want to make the point again. This is a bubble. It will burst. a lot of folks who bought into the commentary and the sentiment and all that sort of stuff will lose a lot of money. If you're being contrarian right now, you could lose a lot of money from here until whenever it bursts. Nobody knows. No one has a crystal ball, that sort of thing, right? I mean, it's just, and part of it is, and people like, well, why are you trying to pick holes in this? Like if people are making money. And what we know, and you've been closer to this for longer than I have, let's say the retail investor, psychology, because you started doing fast money in 06, 07. I started doing 09 options, and then 2011 fast money. And through that process, we get to meet and hear from a lot of, self-directed retail sort of investors. And one thing we know, and this is not, us passing judgment, we know that a lot of folks make really bad decisions at highs, and they don't know it's a high, but it's, you know what I mean? Like and they make really bad decisions at lows. Again, they don't know it's lows, but it's like max pain both ways. And that's why I think it's important to have these conversations, guys.
I agreed. What do they call it when you have an account not in your name? Like, what is that called?
A burner
account. Well, it appears that though, I think you may have a burner account. Amanda, please throw this up. This is from Urkel 7374, who was here yesterday, by the way.
What's up, Urkel?
Dan has a great head of hair. So, okay, Dan, we
know what I did today? I will tell you this. It is so freaking cold. It's like 13 degrees. So probably like you, I'm a guy, so I don't blow dry my hair. Is that for Bill? You don't blow dry your hair. Okay. So this morning, I didn't blow dry my hair. I got my hair because walking to work yesterday, I told this to Amanda. I was on the phone with her as I was walking to work. My hair froze.
Yeah, it happens.
My hair froze. And then I had a headache for 2 hours. So I dried the crap out of it. It does look really good today. So I appreciate that, Arkle.
Yeah, or you appreciate that you. Real quick, somebody's asking, would you rather Bristol or Pfizer? This is from Marvelous Marvin Hagler, who was here yesterday. These people, they're with us every day, which I love. I would Bristol Myers. That's just me. Bristol has some things going on in oncology that I think is quasi exciting. We'll see how it plays out. I think valuation for both are compelling. I just think Bristol's sort of set up a little bit better. And quite frankly, we have this downtrend in Bristol. If Amanda wants to draw a downtrend line from the high in December of 2022, you will see that we are quickly approaching this downtrend line, which, by the way, will coincide with where the 200-day moving average is. So this is either going to get really interesting or we're going to fail miserably. I think it's going to get really interesting. Oh, the 200-day moving average is lower. I apologize. I thought for some reason it was higher. So I think we go through this trend line. We'll see what happens if and when.
Yeah, on a shorter term basis, though, it's right at that trend line. So go back to a 1 year for a second. Oh no,
we are.
All right. Okay.
Yeah. No, she's right.
I thought
anyway, that's my thing for that.
So you started the program, this little program we do, as BK calls it, our radio show. We got to get
BK say that.
Yeah, he says, how's your little radio show with Guy doing?
I love that. I miss BK.
Isn't that funny? It's funny.
He's sort of like, he's a smart man. Like, he's just
Brian Kelly.
I will tell you, if Brian's watching, which I'm sure that he is not, he's done it. Like, he literally wrote the book 11 years ago, 12 years ago in Bitcoin. Like, he captured this whole thing. And he, unlike some people, he has sort of faded back and is now in the darkness somewhere in Nantucket or Aspen or Wyoming or all the places he should be at. That's what I would do in a similar circumstance. Like, if I rang the bell the way he did, you wouldn't see me again. But that's me. So congratulations to Brian Kelly. Back
just
to you.
And maybe the peeps can pick it up on Amazon here. So the Bitcoin Big Bang, it was published in 2014. Yep. And one of the most, and BK wrote this, one of the most important things about this is that I have a quote on the inside cover of the book.
Really?
Maybe the back cover. I can't remember.
He had,
I'm such a dumb, I mean, he had me read it, parts of it before it was published. And it really, he dumbed it down for me. He dumbed it, you know what I mean? He made it really digestible. Except for it was just a concept that was so hard from a monetary standpoint, from a technological standpoint, from just a confidence standpoint. You know what I mean? It felt like just another one of those things. And to be frank, I should have put more faith in my friend that if he went to the trouble of writing this book, and by the way, well before, what do you call the GPT with a chat thingamajiggy?
PCR, I said last
Yeah,
night on the show.
which was very funny. It was very, you said to me, go to your chat PCD thing or something like that. So I mean, he wrote it. I mean, he probably wrote in 2014. This thing was probably trading at $500. It's at $90,000. So and again, you should pick it up just to read my quote that I have on the inside cover. Because
Do you remember what the quote was, or do you have to go back to the book? And
I'd have to go back. I'd have to go. You know, for the Fast Money Live guy, you know, so they did these trading cards for us with our picture, and then they wanted our money quote
calendar.
Right? What did you say on your money quote? Because they wanted something, you know what I mean?
I don't know what I said, to be honest with you.
But you probably said something, you know, so mine, and no one got it, like no one at CNBC, you know, my money quote was, "It's easy to grin when your ship comes in and you got the stock market beat. But a man who can smile is a man who can," or no, it's a man who can, "a man worthwhile is a man could smile." No.
His pants were too tight in the seat.
Yeah. So that was Judge Smith.
Of course, Ted Knight. Yes, Caddyshack. That's a long quote, by the way, but it works.
Dude. It's from Caddy. It was popularized from Caddyshack.
What is Bill?
Okay.
Is Bill
It's an Irish poem. That's fine, but it was popularized in America. But that was my money quote. All right. Guy, here's another one. We started talking about Folgers.
America.
And we didn't even tie it into this because Bill is making a great cup of coffee with the Nespresso machine we just got. It's very good. But Starbucks reported.
Yeah.
So let's talk about this. Look at the price action today in Starbucks. Huge gap higher. Huge gap higher. Let's see that
giving it back.
Okay, look at that. So you can't see it. Now do a 3-day. So it opened on the highs. It's trading at the lows. It's filling in that whole gap. I mean, that's a huge move. So forget Starbucks, okay? What does that sort of price action mean to you? Now go back to a 1 year because you're going to see the move like into the print here.
Go back to April, and Amanda's doing that. So remember, that's where we broke down from in April is about $98 or so. Obviously, I get it. We traded, just put that axis up a little bit, and you can see what I'm looking. So we broke down from there, $99. We obviously traded through it today, but you can see those levels have been problematic. And the fact that we're below it now is equally problematic. So if we were to give the entire thing up, which we almost have, I think it's trading 97.5 right now. So it's up $2. You got to close below 95 on the amount of volume that it's probably going to trade, which it typically trades about 10 million shares a day. We're probably double that already. That's just no bueno. So keep an eye on this one there, sports fans.
Yeah, and obviously management change, and you know they're on their 5th restructuring, and feels like in 5 years, that sort of thing. I mean, I don't find it particularly interesting, and obviously inflationary pressures are something that I think is probably hit margins a little bit over the last.
It's a valuation problem. It's a competition problem. It's all the above, man, and it's it's a mature business. And when Starbucks was everybody's darling, and for a long time it was. I mean, just go back to the moves that we saw from 2018 into 2021, and it made sense. And then all of a sudden, more competition, margin pressure, China problems without question, maybe some execution problems, and you see where we are. And it's still not cheap, despite the fact that it's significantly lower than the all-time high. So I don't know. I mean, I'm not a fan here, especially if it gives the entire day back.
All right, let's hit these three. Amanda has got a little diagram with oh, we're gonna do
like diagrams.
How did we opened with Folgers and not Butters?
Oh, we have Butters today? I thought Thursdays, but it's, I mean, oh my God.
Today's Wednesday, guy. And what do we do on Wednesdays?
Let's set it up. By the way,
let's do this. Let's do this other stuff because I was that it'll help us. It'll help us segue. It'll help. We're
gonna be on with Butters, I think, soon.
Monday. No, in a week or two. All right, we're gonna blow out Butters. Just don't people stick around for.
No,
Butters.
we're not gonna do that to John Butters.
No, blow it up. We're gonna blow up the segment. Okay. Let's go to the three names reporting tonight. And obviously we'll hit the Fed like when we get out of here. So tonight after the close, Microsoft, Meta, Tesla. I think in the order that I just mentioned, Guy, you and I would agree, Microsoft, Meta, Tesla, those are the most
I
important.
agree.
Okay. Let's talk about Microsoft for a second here. So implied move. All right. Pull up the 1 year because you and I, okay, there you go. You see it? It's like 5% plus or minus, whatever. The stock has just rallied 10% into the print. But we had been noting how poorly the stock has been acting. It wasn't hard to figure that out. That double top that you see on those big gaps to new highs and then the failures, those were both the prior to earnings events. Okay. So now we broke below the 200 day about a month ago, and you saw that we fell off a cliff. At that point, at the lows, we were down about 20% or so. Here we are up at that 200 day. Okay. This report is interesting to me. And most interesting to me, we got to hear about CapEx. We got to hear about the uptake of their AI products. But this is one of the things that I find most interesting if you're focused on how they are monetizing their investments. And like, pull up this article, Amanda, from the Information today, because I think this is something that is going to be the story for 2026 with a lot of these companies that have accrued a lot of the value, over the last 3 years since ChatGPT came out. So Anthropic has come out with a new tool, okay, that is basically competing with copilots, okay, you know what I mean, that Microsoft's trying to sell, enterprises to do all these jobs, these agentic jobs on their desktops and stuff like that. And so I just think that this sort of assault, and go back to the headline at the top. It basically says that, they race to respond. They're having all hands by their so what do you make of an article like this coming from a very well-sourced, publication? I love the Information. And I think
it speaks to what everybody is facing. I think for the longest time, market pundits and participants felt like a lot of these companies had these huge, wide and deep moats, and maybe for a period of time that they did. But then all of a sudden, especially in today's world, competition comes very quickly and seemingly out of places that nobody saw coming. And I think we saw that to a certain extent. You remember what happened with NVIDIA when it was a year or so ago when we got that news out of China. We've seen what's happened with obviously Oracle. Now we're starting to see what's happening on the sort of the competition front with Microsoft. It's all there. And really what competition means is margin pressures. And that, I think, to me, is not being taken, not taking into consideration for some of these valuations. So that's an important article. I'll say this, I have to be consistent. I was really encouraged about Microsoft into earnings a week or so ago as we continue to sort of cascade lower. But as you just pointed out, we've just basically traded up about 9%-ish from that low we saw, a week and a half or 2 weeks ago. So the setup is not as great as it was. I still think there's a reasonably good chance, I think more than 65%, that Microsoft says things that the market is going to like, and we get this gap higher. I don't know how long it's going to last. What I was hoping for into this print was a gap fill that we saw back in May. It looked like that was a possibility a month or so ago. Obviously, it's not going to happen now.
Yeah, that would have been a layup. But I think
that would have been a layup. Yes.
Layup. I think your point, especially to establish, start establishing position, that's right. And listen, some people might have said, well, 425, why wait until, you know what I mean? Like buy
and they'd run up being right. Yeah.
But your point is an interesting one. Let's just say they put up a really good quarter. They put up great guidance. They kind of talk to CapEx that makes, investors feel okay. You know what I mean? Like, because there's an argument to be made. If you dramatically increase CapEx, then maybe some of these stories that are being written about competition from a company like Anthropic are the reason why you are doing such thing. But then you mentioned DeepSeek a year ago. It was January 27th. Chinese company come out with a model. It's open source. They tell us that it takes fractions of what all these other companies, OpenAI, and then are doing to train their models. And then all of a sudden, you would call into question the hundreds of billions of dollars these companies are doing. So to me, let's just say everything's great. and people are like, wait, why the hell were we selling this stock so aggressively over the last 3 months or so? And you get a gap above $500 or something like that. Then you got to go back and say, how did this stock trade the last two big gaps after earnings? And so if it was me and I was long this thing and I participated, let's say from a trade, and I participated from 450 to where it is, and then you get a gap up above, I'm probably selling it hand over fist. You know what I mean? Based on the price action that we've seen on the gap. That's all I'm saying.
I know, you know what, and I'm glad you said that. And real quick before we move on, this is one where you could spend the next hour formulating a plan and set it up vis-a-vis options or outright stock in the way Dan described, because I think there's a reasonably good chance you do get that initial enthusiasm higher, and then the question is, are you going to ride it or are you going to fade it? And I think fade is probably the right course of action. So this is a fun one. And again, you don't have to do anything. You can sit back and watch and see how it plays out. But if you want to get ahead of this thing, whether you're long calls into this or outright stock, wait for the initial move. And then I think especially if you get it up to like 5.25, 530, you take a shot, you fade it fast. Maybe you sell your calls out, you buy puts, whatever the hell it is. But this is going to be a fun one to watch just in terms of the theater and the way it trades post earnings.
Yeah. I'd be shocked if you have a huge move to the upside. Personally, I could see a miss in a guide lower and you got a stock going back.
You know what? Okay, so let's play that out. A miss in a guide lower, and then, the enthusiasm over the last couple of weeks is obviously thrown out the window. Then we're talking about that gap again that we saw back from the spring of last year. So I don't know. None of us, look, people that tell you they know what's going to happen are full of shit. And we never say we know what's going to happen. We postulate as what we think could happen. So you understand, you think, at least I've made it clear what I think is going to happen. But to Dan's point, you get the flip side of that coin. And then we're talking about, okay, valuation concerns around Microsoft, the slowing environment, competition coming. Do we fill that gap down to wherever the hell that is, 405 or so?
Yeah. I mean, the other thing I'll just say is, like, if you're looking at, Micron and Western Digital and Seagate and SanDisk and how these stocks have traded, you said, oh, how could I not have just, taken a flyer and bought calls because I would have made a shit ton of money, into these earnings moves and stuff like that. You got to get a lot of things right when you're long premium, long calls or puts into an event. You obviously have to get the timing, the direction, and the magnitude of the move, right? And when vols are as pumped as they are into these sorts of events, I mean, all of these probably had 10% implied moves. So let's just say into today's print, Seagate had a 10% implied move and it's up 20%. Okay, you're getting paid. But that hurdle of getting above 10% in either direction doesn't make it. I mean, it makes it really hard. If the stock had gone up 10% and you were long, let's say the at the money straddle or whatever, not helpful. So, okay, let's look at
shit ton is a financial term. Back to you.
Yeah, I mean, God, that's been used on trading desks like a gazillion times over the last, and gazillion is also a financial term too. Meta is really interesting to me, Guy, because if you go back to and see that gap, right, and went through its 200-day and kept on going, and it definitely, came back a bit, and then just, retested those lows, came back a bit. It's at that 200-day moving average. It got punished last quarter because of their CapEx spend, because of the rate of the increase and that sort of thing. So now you have to ask yourself, Zuckerberg's one of these guys. He can be a bit savvy here and there, and
crafty.
Go back to 2022, let's go 5 years. I mean, that stock sold off 70%. And it wasn't until they started doing, heavy headcount reduction and other cost reduction moves, and that stock started working. And then you see those moves and the gaps on earnings higher and higher and higher. So talk to me here, because, fundamentally, I believe now that Google's got their act together with Gemini and their distribution across all of their major, platforms, you could say, well, Meta has that same thing going for it too. It's got the Blue Page, it's got Instagram, it's got Reels, it's got WhatsApp. I just think that the models and the success that Gemini has had relative to Llama at Meta, I think it's just night and day. So I'd much rather own Google here for the next year than I would Meta.
Fair. Amanda can draw a trend line. Oh, she's leaving me. She wants to go back. We've made a pretty compelling. As a matter of fact, we've talked about 335 being the level that Google should trade on valuation, and that wound up being right. But you can draw the uptrend from 2023. You can see it as clear as day. The downtrend, if you want to draw it from that recent all-time high That's in place as well. So you have this little pennant formation. You're asking me what I think. Well, it's a very similar setup as Microsoft, and a lot of similarities in terms of what's going on. If he's coy and he says constructive things about the spend, or they ratchet it back just even a little bit, you're talking about a stock that could easily test all-time highs. So I actually sort of like Facebook in the earnings here. And if I'm wrong here, we'll be back tomorrow. But like Microsoft, I think Facebook could surprise some people to the upside just on the back of the commentary.
Yeah, I wonder
Because the numbers, I think you would agree, I think the numbers are going to be really good.
Yeah, I do. And I think part of the Brent Thill upgrade last week from Jefferies was, people have been saying this, by the way, Guy, for 5-7 years, just wait until they monetize WhatsApp. You know what I mean? And so that was part of the thesis. I think that, again, listen, I just think there's probably better ways to play this. And I think Carter might look at that in that little flag or whatever you want to call it. Maybe he called it a pair of twos. Maybe there's another move back towards 605. And you know what I mean? Like you get that like tighter and tighter and tighter. Like that's all I'm saying. All right, let's look at Tesla. So this is one that I think is interesting because, and we've said this, one of the things I've found fascinating over the last few quarters is that all of a sudden the bears and the bulls about the EVs, and that was the story in the prior 15 years since it went public in 10 or whatever, they actually coalesced around the same view on EVs, that they're not good, like meaning, the growth is not there anymore. The margins are not there. And this story is not about EVs anymore. The bulls and the bears agree to all of that. Okay, so here we are, Guy. It's kind of been stuck in a range going back to, you had that gap. The fall. And then here we are. What do you do if you listen? I know you're a huge sci-fi guy. I know that you were like on the cutting edge of technology that's here, and that you believe that for the most part, all that sci-fi stuff turns into reality eventually. You know what I mean? I know that's been your view. So can you get behind $1.5 trillion meme stock led by this brilliant madman who dreams it up and it all happens? This is about robo-taxi fleets. This is about robots. He thinks there's going to be more robots on this planet, Guy, in the not so distant future than there are humans. He also thinks that, Mars, which is like minus 80 degrees or something like that, that humans will be inhabiting that. He has a rocket.
He did that already. Matt Damon did that.
He did. And you know who else did? McConaughey. By the way, these Uber Eats commercials, have you seen these? With McConaughey and Bradley Cooper, the two of them together, you will lose all respect for both of these actors that I know.
Slow down. Brad Cooper, Georgetown grad. So it'd be very difficult for me to lose respect for Brad Cooper. Who, by the way, big Eagle fan, and I respect that. I mean, he wears his team on his sleeve. Good for him. Matthew McConaughey, on the other hand, a little bizarre to me. There's always sort of a little odd.
He's a great actor.
I loved him in that Grisham movie, A Time to Kill, I believe it was.
Yeah, that was great. That was 30 years ago, that movie.
I think Samuel Jackson was in that movie.
Samuel L. Jackson,
Ashley Judd, the guy that's in all these broadcasts, different shows,
kind of heavy guy with the
PD. Yeah, he was also in the movie with Kurt Russell, where they, if you recall, they hijacked the plane. Remember him? Remember that whole thing? He was a guy. No, not McConaughey. The guy with the hair, and he had to put the straw in. Remember that whole scene?
No, but here, this is an aside, and I'm sure Doug appreciates this too. John Grisham. If you were a young person, John Grisham was one of the most prolific authors in the 90s. Do you know this, Bill? He wrote. It started with the firm.
Oliver Platt.
Yeah, Oliver Platt. He wrote Oliver Platt. There's this thing with Jake Gyllenhaal, this little clip. Can you get this? They're sitting in a lobby somewhere, and Gyllenhaal's like the cool guy, and Oliver Platt's like his buddy there. And find this clip. It's so funny. We'll play it for you guys. With Gyllenhaal, and what he says and Platt's take on it or whatever. It's like I've seen it on the interwebs. But Grisham was prolific. Every book that he wrote in the 90s became a movie. He must have made a fortune because the books sold like crazy. The Firm, A Time to Kill, Jury. There was a few others, and every movie did. The Firm was an international sensation of a book. It was kind of like the Da Vinci Code.
Gene Hackman.
It was amazing. I mean, there's so many great actors in there. Wilford Brimley. He goes, my mom wanted me to be a farmer. Remember that? He's like, well, my mom wanted me to be a baseball player. You're the best goddamn baseball player I ever saw. Or hitter or baseball player. What do you say? Wilford Brimley played probably his own, like the only evil role, that he ever played was in the film.
Pelican Brief, I believe, with Julia Roberts.
Look at you. You went to the IMDb. I know what you did there. Do we have that Gyllenhaal clip, Jacob?
I hope not.
It's so funny.
I mean, I hope so. Did I say not?
So back to
what's today, by the way? Oh, you want to talk about Tesla? Sorry.
So this guy, he dreams it up. It happens. So the story is about robo-taxi fleets and about Optimus robots. So is it just it's a flyer? Do you just say like, listen, I'm all in for the future?
That's exactly, and a lot of people feel that way. Again, I'm glad you brought up the fact that bears and bulls have both come to the realization that it's never been about their auto business. That's a loss leader. And obviously that's something I struggled with for a long time because I would point out incorrectly that, margins were approaching levels from the legacy automakers and they shouldn't get that valuation. But in reality, there are a lot of other things going on. There are people out there that have been on CNBC that think Tesla will be the first $10 trillion company. I have no idea. What I'll say is the bulls have been steadfast. They have not gone anywhere. And the stock, to your point, which has done nothing, is still in an upward uptrend, an uptrend from the April lows. If Amanda wants to draw that uptrend from the April low, you'll see exactly what I'm looking at. And then you could draw the downtrend and you can see what we're looking at here. So there you go. There's your pennant formation. What happens from here? You tell me. I think the enthusiasts are going to say we're going to take out the prior all-time high. I will be honest with you, Dan. I have no idea because, quite frankly, I don't think the numbers matter all that much.
Yeah. Doug just said to me, didn't you promise not to talk about Tesla yesterday? Listen, I think I was about as calm as I could be about that. Like, this stock does not, listen, I think Elon Musk is one of the worst people on this entire planet. I'd love for him to go fuck off in one of his spaceships and go to Mars. Okay. As far as I'm concerned, and we don't have to deal with him anymore. But I'm just, as far as a stock, I got no beef. You guys want $1.5 trillion meme stock? It's on sci-fi stuff. You have a ball.
By the way, for you Fast Money fans, this just is new breaking. Obviously, next week is February.
Yeah.
Next Thursday, the 5th, there will be no Fast Money as there's some sort of Olympic coverage going on.
Yeah.
And then from February 9th, which I believe is Monday, until the 20th, there is no Fast Money as we are being usurped by said Olympics. So for you Fast Money enthusiasts, you better get your fix in now, bitches, because you ain't going to see us for a while. Back to you.
Bitches.
That's a term of endearment from what I could tell. Like, people say that like it's Brittany bitch. Like, she started the whole thing.
Well, we
better get the butters, by the way. Otherwise we've
done this a bit for every 2 years or whatever. Is it whatever, and it's really funny. Like, I think it's one of the best shows on the network. I could
the Olympics.
Fast Money. And then maybe I'm being, I'm being biased here. I could literally watch most of the other shows and it could cause me.
You know what show I love?
All right. So just to finish
up, halftime report, which is on in 11 minutes. So we better get out of here so I can tune in.
I love the half. Scott
is such a great group of people, such a likable group. I just enjoy them all.
Listen, Scott's one of my best friends, and I think he's one of the best journalists.
I just said that.
I know you agree. All right. So Tesla, again, I am actually very fascinated to see, Guy, how people react to, the EV numbers and then how much faith is being placed in the other stuff. Okay. And the last thing I'll just say, and you mentioned this, because of that pay package and everything like that, I think Tesla, maybe this year they buy XAI. I think they continue to figure out how to push all this stuff together. And then SpaceX going public this year, whether it can or not, will be really interesting. Supposedly they did a bake-off last week for banks, and it's going to be Goldman and Morgan and JP, and one of them will be lead. Or so that'll be a really fascinating test, I think, to the whole Musk aura. Does money, Guy, come out of Tesla and go into SpaceX? Like that could be a thing. You know what I mean? Like I'm just saying. So we'll see about that.
Did you say a bake-off?
What do they call it? When the banks go in there to the companies and they're pitching for the biz? They're pitching for the biz. All right. So on Wednesdays, Guy, this is one of our, I guess, one of the things we look forward to all week. We do market call Monday through Thursday, but on Wednesdays, what do we do, Guy?
Well, we highlight the work that the great John Butters does. Of course, John Butters, the senior earnings analyst at FactSet, a friend of ours, and somebody whose work we were reading long before Risk Reversal Media was even a glimmer in the eye of Dan, Nathan, and Guy Adami.
No doubt about it. So each week he writes the Earnings Insight blog, and you can sign up for it, have it in your inbox, factset.com/insight/subscribe. And by the way, this weekly report that he puts out, there's augmentations of it all week long. We put it in our Market Matrix podcast each afternoon. So check out John's work. Okay, so this week, Guy, he's talking about S&P 500 net profit margins, and he's going back from 2021 into Q4 2025. Okay, and so we're looking at the margins here, and he's saying the blended includes actuals and estimates. Net profit margins for the S&P 500 from Q4 2025 is 13%. That this reflects a quarter-over-quarter decrease, but a year-over-year increase. The previous quarter reflects the highest net profit margins reported by the index going back more than 15 years. Okay, so profit margins are important because when we're looking at the results here, and so this is the blended as results and estimated here, you see this sort of decrease, Guy, that we're seeing on a sequential basis, but not on a year-over-year basis. What is this telling? Is this inflation? Is this inflationary inputs that's having an impact?
So, as John's work suggests, I mean, this is the highest level, albeit 0.1% off what we saw the prior quarter. But, as you approach sort of 13%, people start to talk about peak margins. So I'm not ready to say there's a deceleration yet, because I don't think 1 to 13 is statistically significant enough. However, there will be people that say peak margins typically lead to peak market. Now, the flip side of that coin is people will say with AI and what's been going on in the world that, you can't make the same argument because AI enhances margins and profitability. Maybe there's some truth to that. But for now, I will say, as we get to north of 13, that's typically when things start to get historically a little bit dicey for the broader market.
Yeah. And let's look at it on the sector level, because this is where John goes. And this is some of the stuff that I think helps us think about it from a macro to a more micro situation. 4 sectors are reporting a year-over-year increase in net profit margin for Q4, led by technology sector. Okay. We know why. These are the companies that have the pricing pressure in this environment. They're meant to be asset light, but when you see what's going on with a lot of the infrastructure plays and the scarcity, they have pricing power, which is helping margins. Now, the flip side of that, you could say for the buyers of those products, you know what I mean? It's kind of squeezing their own margins, but they're whatever the powers that are in play, they're causing year-over-year increase in margins. 7 sectors reporting a year-over-year decrease in net profit margins for Q4, led by the real estate sector. Talk to me about the sector stuff.
I can't. Real estate is. I can't explain to you what's going on there. But what I'll say is this: I look at this and say, okay, industrials, relatively strong margins historically, but what's the drop-off suggest? Like, what's going on there? Are we getting too excited about the industrials? And, you look at a lot of these stocks, whether it's Caterpillar, Deere, Boeing, you name your industrial, they've all had tremendous runs. So maybe this is something you got to watch. Financials is the other one. Financials is improving upon, it appears at least, or right around prior year. So financials continue to sort of hold in there. But, this is probably historically the deep end of the pool, financials as well. So those are the two that stick out to me. And both to me suggest that maybe things are about to turn.
Yeah. Again, we're going to continue to monitor John Butter's work throughout earnings season. It's very instructive for us, and it's really helpful actually on the backside of it. Just kind of get a sense for what we saw, what we did, and what we expected into it. So you know where to find John's work: factset.com/insight/subscribe. All right, Guy.
Okay,
On
clip
the way
that.
out of here.
Clip that. Okay,
Yep.
clipped.
Have
Put
a
it
ball
back real
now.
quick.
Okay.
We're having high-level discussions with people to change this to factset.com/butters. I just want people, because I know there are people saying, Guy, I mean, what's going on?
Well, you got the
Trust me,
Liz thing done.
we got the Liz thing done. See,
Yeah.
look, that happened. So we're in talks, just so people are on board. Anyway, back to you.
All right, I want to do this real quickly. Fed meets this afternoon, 2:30 presser. We know CME Fed funds tracker saying there's a 2% probability that the Fed does anything. Not happening. Okay, I felt bad. I was on MSNBC last night with Steph Rule, who's she knows about the market. She was on Bloomberg for a long time, and she goes, "Okay, quickly, Fed meeting tomorrow. What's going to happen? Nothing. That's not good TV. That's not good. That's what's that? That's not good TV.
Not even the fee. That's from Michael Corleone.
Yeah, but you know what I'm saying.
You can have my answer now. Nothing.
Nothing.
Not even the fee. Michael's.
Yeah.
Tremendous.
All right. So
I mean, I think that's a foregone conclusion. It's really the Q&A and what comes out after it, and who internally was dovish, who was hawkish, and all those types of things. And on the back of this, are we going to hear who the nominee is going to be? Like, who's going to be the next Fed chair? And what is the fate of Jerome Powell as he exits in May? Those are the things that I think potentially are market moving. I'll say this. I never thought Kevin Warsh was going to get the job. I think not that he shouldn't get it. I think he'd be an amazing Fed chair. I just don't think he's malleable enough for this administration. That's just my view.
Yeah.
That's a good word, by the way, malleable.
So the S&P, and I know Cece's going to snicker here, is trading at 69.69 right now. So it traded 7,000. So if I just look at let's call it the 69.70, at the money straddle. Okay, it cost you, I don't know, what do we got here? About $32 or something like that. So you can do the math here. If it was, we're talking about 0.5% in either direction, right? That seems pretty reasonable. I mean, we've had some big moves on Fed days over the last year and a half. I mean, oftentimes, and this, let's say you get that initial move right and into the close because the Fed presser ends at 3:15 or something like that, and then the next day it reverses it pretty frequently. So the Fed day is usually a tough one to trade. I think for those of you who trade futures or trade 0 days to expiration, it's probably fun if you get the chop, you know what I mean, here and there, that sort of thing. But it's a hard thing to do. So again, I don't have a strong view. I think that expectation. Well, the one thing, Guy, he's going to get asked a lot of questions about the the independence of the Fed, the investigation into him in particular, and then the situation with Lisa Cook. And he's going to be asked the question, are you going to stay on as a governor when your job as the chair is over? So those will be interesting things. I think he probably shies away from answering any of them.
I can't speak about an ongoing investigation. Next question. By the way, what did Dustin Hoffman say in Rain Man like a few times during the movie?
Judge Wapner.
How many minutes?
How many minutes?
To Wapner.
How many minutes to Wapner? How many minutes?
Right. Now we have 2. So
now I know you love Tom Cruise. Where do you put Rain Man as far as Tom Cruise movies in your top 5?
It's a good question. I got to think about that. I'll come back
Definitely
tomorrow. I don't know if it's a top 5. I mean, all the Mission Impossibles get jammed in there. Days of Thunder is just a tremendous movie.
Yeah.
I mean, both Top Guns. I mean, how do you not?
One of the most underrated Tom.
And you don't like the Jack Reacher movies? I think he was great.
I like the first one. The second one was like a B movie, but Robert Duvall was in it, and Hagen is one of my all-time favorite sort of guys. He was also in Days of Thunder with him. I wonder if they had a little thing.
100%.
So I wonder if Tom Cruise loved him in Days of Thunder with him so much. He's like, I got this spot. I got this role for you.
Of course he did. I mean, they're boys.
Most underrated Tom Cruise movie, Collateral. Michael Mann directed it. Jamie Foxx was in it.
Sure. It's sort of filmed in like a noir type thing. Yeah. It's like black and white.
The only movie, I think, in his prolific career.
1 minute to Wapner.
I see what you're doing now. The only movie he played the bad guy is Collateral. Okay. Thanks to John Butters and his fine work. Thanks to Doug, as always, for his contributions, keeping us on the straight and narrow. Thanks for Guy Adami with just all that wit. We'll see you on Fast Money tonight, 5 o'clock.